All right, so we'll just go over some markets and then the trade opportunities today. What worked, what didn't work, etc. All right. So first, let's just review, and then we can do all the rest of the stuff. All right. So I'm gonna take a look at crude, ES, and the other one, gold. All right. So first thing to note is the top row are the daily charts of gold. On the upper left hand corner. In the middle you have crude, and in the right hand corner you have ES. Underneath that, you could use the 4-hour or you could use Renko as your middle time frame. I use both, but it doesn't really matter. You can use one or the other. And then for support and resistance, obviously you know how to do support and resistance. You can also use volume-based support resistance or just highs and lows, or the test of breakout, etc., etc. Right. So what we see in here is the two levels here. All right. So I'm very interested now in gold. Why? Because gold is coming to the level. It's almost there. Maybe tomorrow. I don't know. But this is the level 2058. So 2058 had heavy selling. That was the resistance area that had heavy selling, which caused the biggest bar in 14 bars. The biggest bar in 14 bars down, so that's what the 14 means, how big the bar is. It's a statistic, so this is the biggest biggest bar in 14 bars, and it's on the downside, right? And it's coming from the selling that came at the 2058 level. All right, so that's where that is definitely, definitely strong hands active there. All right, it's at daily resistance and it did a lot of damage. So obviously they're there, right? And and look at the way it's creeping. So that 1 bar of damage has like 3 bars so far that still haven't taken out the high or tested the high. So I think there should be some reaction at the 2058 level where the original selling came from on the daily for gold. All right, and then where the buying came from was this level, which is the 1990. So 1990 is where all that buying came from, and they ran it up to 2085 and then sold 2058s. That's where the most pressure is, and that area is going to get tagged. So just to show you how it looks, the same thing on the Renko chart. It looks real sweet, like right there. It's getting ready for that first test right there against that heavy brick volume. That brick volume has the biggest down volume in 40 bricks. So it's a foregone conclusion there should be some reaction there, and you can capitalize on it on the downside. All right. So last time it tested that, did all this. Anyway, so if it does that, it can probably come back down. You have enough juice here for at least some reaction, so don't sweat it, just get it. All right, next is crude. So that's 75.42 is looking real nice for the sell, and it's almost there. I see already the ranges are declining. All right, so that is telling me that the activity there is also declining. So that's 75.42, and the buyers are at 68.53. So 68.53 is where they came in and caused the bounce, and now the bounce is going to 75.42, where it should get stuck. It should react. What the fuck? I know, what is this? Beacon, goddamn trade station. So, all right. I hate when, I don't even know why it does that. But anyway, it's 75.42 and 68.53. So I'm looking for that for them to tag that 75.42, and I'll show you the trade that's set up today, because I knew they were going to go to 75. Very likely they're going to 75.42, and they're going to stop right here at this level right here today, and I'll go over that 75.39, I think is 79.40, 71.40, tapped and reversed. So I'm looking at this as a really nice area to react from, and it's going up, not too strong, so that's a good sign that there should be some reaction there. And then finally, this area here, again, really interesting too, but the ES is a very tricky market. You have heavy selling here and here in these two bricks. So the 40.75 and then above there is like 40.88.75, right? So you have 40.75 low. That's where the pressure came in. The buyers came in and got the biggest bar in 30 bars, but it had no follow through. I mean, it had very little follow through, very inside type of, little bar, little bar, little bar. That's not a good sign for the bulls unless they're consolidating for a break, right? So I'm looking at a 488.75 and 40.75, and very intently. I thought it was going to go to 40, what did I say? 41.88.75, all right? 41.88.75, and over here it's 40.75. What the hell is 40.75? I don't know why I got 40.80. 1 second. 40.75. Yeah, 40.75. There it is. Right, so must be some other level. Wherever I'm getting this, probably back here. Anyway, so yeah. Anyway, let's see if it breaks through and goes to that 41.88. 41.88.75. That's where the pressure is, or will it fall back and start doing all those tests, etc. All right, so usually it will go there, because remember, one thing you know about direction, right? I mean, they say direction is random, but it's not totally random. The predictability for direction comes from volume, and it's really simple. The purpose of the market is to fill orders. So where do you think it's going to go? It's going to go where it can fill the most orders, areas of high volume. Right? It always goes in that. Anyway, so 41.88.75 and 40.80.75 along with 40.75. All right, so I'm done with this. Eventually catch it tomorrow, but I'm going to show you what happened in gold. In the crude. So in crude, because price is on its way to 75.42. So what happens is, okay, all right, what happens is, when it's on its way to 40, to any price level, right? It's going to rotate. I mean, it's going to rally, pull back, rally, pull back, rally, pull back until it hits that target. All right, so these areas of high volume are like targets, but the way you get to that target is rally, pull back, rally, pull back, rally, pull back. So those rally pullbacks offer opportunities. All right, and you just have to know how to capitalize on them. So here you had a rally. Here you had a pullback on its way to 75.42 as the market pulled back to where? High volume areas. Why? They are defended, okay, because demand was there. So the question example is, let's just say that you have price and it wants to go to a target of 100, and right now it's at 80. It rallies to 90. How far will it pull back? It's going to 100, And right now it went from 80 to 90, and now it's pulling back. It made that rally from 80 to 90, and now it's pulling back. How far will it go? Will it just go halfway back, which is a possibility? Will it go 68% back? Will it go 38% back? Will it go 70, whatever is it, 72% back or something like that? Right? How do you know where it will go? So for every market you trade, you have to know where is it going. You have to have an approach that tells you where it's going, whatever it is. One approach is just identify areas of high volume. That, because volume attracts price. Okay, that's its nature, it attracts price. It just does. Because the purpose of the market is to fill orders, so that's where it's going to go. So as it goes to these areas of high volume, it's going to create rotations, rally, pullback, and this is one example. So crude is going to 75.42. It has its rally, it initiates its pullback, but where is it going to go and reverse? This is very, very important for pullback style traders. Most traders, they'll just draw the Fibonacci 50%, 68%, look for the quote-unquote golden zone, you know, or something like that. And others will do Ice and Creek and this and that. Well, you can, one really important approach, and this is whether you can use profiles, various profiles. You can use, or you could just know how to use price action, because what you're looking for is areas where you have breakouts, test of breakouts, demand zones, absorption areas, right? So look at this. This is how I knew. You see this big volume here? Where is it? It's in that 58 brick, right? Where it says 58. That's where it's going to go. That's where price is going to go. Now we have to see if there are going to be buyers there, right? So it rallies on its way to 75.42, doesn't really get there right away, pulls back, but the question is, how far is the pullback going to go? And a high probability area is in this big blue, and look at this line. And guess what? It touched exactly that line on the lower time frame chart right there. And boom, right there you have your change of behavior, sign of strength, Koch or something, change of character. Boom, right there, right? It set up the pullback and blasted higher. Okay, so now the question is, what is it going to do, right? The attraction here is to that 75.42 area, or a pullback back down to this 71.30. What was that? 71.30, 71.39. Is it gonna continue to 75.42, or is it gonna pull back to 71.39 again? That we don't know, but we know it's on its way to 75.42. That is where the reaction should occur. All right, it doesn't mean it has to, but it is an area where prior there was a lot of selling. So if there's a lot of selling in the past, we have to see if that selling is still there. Just like here, you had a lot of volume here in this big blue, right? You had a lot of volume in the 58, and where did it go? Bang, right there. And change of behavior came and price rallied, right? Similar logic. Where to go now? The other volume area, 75.42, or the same high volume area here. So we don't know which one it's going to go to first. We only know that these are like magnets. It's either up there or down here, and when they go there, we need to see if there is a hell of a lot of volume still there. And if it is, it'll come in the form of selling at the upper one, 75.42, or buying in the form of, again, this shit. I don't want to run this. Anyway, so that's what's going to happen. All right, so I'm very interested in how it reacts at that area, and then, establishing the position. Just like over here. It went down to this area, and bang, right at that area, buyers came in. So that means you have to buy the pullback. You just have to. It would make no sense not to buy the pullback. All right, and this is also another thing to note, is that a lot of folks will just trade buy and support and resistance, right? But this approach is a little bit, yes, you have a lot of volume at support and resistance, but there are other places where you have a lot of volume. For example, on the breakout and test of the breakout, right? Those areas have a lot of volume. Absorption has a lot of volume. This area, I don't know what this is. Is this a breakout? I have no clue, but it's just a high volume area, right? So this area, if it breaks this area, the next high volume area is all the way down at 68.55. So my thinking is you just have to get to the high volume areas, because they're orders to be filled, and that's where it's going to go. I don't know of any other way to project price better than that. There's one other there are other cyclical approaches, but anyway, this is what makes sense, right? So anyway, so where am I? So again here, 68.53 if it fails. But before it does that, it's this level here, 71.39. If it breaks through there, 68.55. Otherwise, it's going to 75.42. Volume attracts price. You must master it if you want to trade highs and lows for the best opportunities. Okay, thank you. Bye.